If you don't have a logbook, it doesn't matter how many hours you spent behind the wheel. SARS won't care, and your travel claim may be dead on arrival. Section 8 of the Income Tax Act lays down the ground rules. If your employer pays you a travel allowance to cover business trips using your own car, that money is taxable, but you're allowed to claim back for genuine business travel as long as you can prove it. Here's where most people slip. Business travel is deductible, but trips from home to work are always private. Even if your job means every day starts and ends on the road, only qualifying business travel matters to SARS. And unless you can prove it with detailed records, it never happened as far as the taxman is concerned. Throughout the year, your employer deducts PAYE on 80% of your travel allowance. This can drop to 20% if you do almost all your driving for business, but proof is everything. To claim a real deduction, you need to track every leg, every kilometer, every destination. There are two ways to calculate your deduction. Either count every actual cost or use SARS's cost per kilometer table. Both ways demand a complete logbook, listing opening and closing odometer readings, dates, start and end points, and the reason for each business trip. Let's look at two real examples. Mark, a typical sales rep, drives thousands of kilometers for site meetings. At tax time, he hopes to claim his expenses, but he can't produce a logbook. His claim gets tossed out, not because he tried to cheat, but because he couldn't prove his case. Now meet John. He's meticulous. 25,000 total kilometers, 10,000 for business, all laid out in a logbook. That's 40% business use, and a legal claim for 40% of his car costs. Same job, same effort. One gets the benefit, one gets nothing. Remember, SARS doesn't tax what you earn. They tax what you can't prove. Your logbook is your only defense. Don't leave home without it.